Morning, Chris. How are you doing?
My friend, it's great to see you. I'm great, thank you. How are you?
I'm excellent. This is Brian Jones. I'm here with Chris Hood, professional trader, world's most interesting man. Um,
Well, not really today. I think
got
I'm,
banged up, looks like.
yeah, a little bit. Wife didn't like the dinner I made the other night, so smashed me around a little bit. Yeah, this is the thing with jujitsu when you get to middle age, man. It's like when I go to the club now, it's like, what injury am I going to get today? It's like a bit of a menu option. When I train with a young guy, I have to give them a sort of sheet of disclosure. It's like, look, at the only thing that you can tap me with this week is a nostril lock. Like everything else is hurting. My eyelashes are cool. You can go for my eyelids or something. No, it's just another day in the office, I suppose. Just
Yeah,
another
no,
day.
it's nice. I don't mind getting like a little bang or tweak or whatever, that kind of thing. I mean, I just don't want major injuries.
Yeah, no, I'll take this over a broken leg any day of the week.
Yeah, like a cut or or whatever, just superficial stuff.
Yeah, the stuff that can heal. It's just I'm noticing that my speed of healing has changed dramatically since before COVID.
Right.
Prior to COVID, I would just take a glass of collagen, drink it. Within a couple of days, I'm sort of back. Now it's like, I've got to do an Epsom salt bath. I've got to, have a nap. I've got to do a whole lot of other things. So
It takes like there's like 100 people all involved in your healing process, like making potions, and you got this like you've got a
oh,
massage
I've got my tarot
therapist.
card lady. I've got my tarot card lady coming later. I've got to get her done. No, it's crazy. I think as you get older, your desire to do better in the sport increases, but your ability to heal in time to get better decreases. It's like, that's
Definitely
hard.
a balance you have to strike.
I
So
used to
what's
do
up?
5 days a week. I was training 5 days a week when before COVID, and then it
Yeah.
suddenly stops.
Well, I'm kind of convinced that your body sort of just adapts to it. It's like you start, if you go out for a while, you'll start bruising again. It's like your
Yeah.
capillaries aren't strong, or you all your everything, all these little areas on your body that you don't normally they don't normally get sore.
My back is sort of immigrating. I've decided my lower back has decided that it doesn't want to live in the cold. So my back wants to live in Mexico, but the rest of my body wants to stay in Canada. It's like, you know, it just doesn't want to do its job. It's like a lazy employee sitting at the bottom of the garden smoking weed. It's like it's just not doing its job. It's crazy.
So
So what's
how's
been happening?
what's going on this week? What do you think? We got a short week, so
I love short weeks, man. Yeah, today's going to be interesting. I've been watching bonds, to be honest. I think bonds are going to be the key for the week. If bonds sell off and gold can hold itself, I think we're going to be seeing a bit of a rally in precious metals. Um, as far as the market goes, I mean, I've been calling that September is going to be a bit of a crap month, right? I've been saying this since May. Fourth quarter, new president. It's the same thing every year, but the signals are just telling me that I might be wrong. I don't know. I've gotten to a point where predicting anything has become a crapshoot, right? So if anyone sits on TV and goes, "Well, the market's going to do this," I just don't buy it anymore. I mean, calling a top now, no. I think that there are easier bets and safer ways to play than trying to call a top on a market that just seems to, it's just resilient. It just doesn't want to stop. So, again, I told my clients, trade the chart in front of you. Don't try and get wrapped up in having an opinion one way or the other. If the chart's bullish, trade the chart. If it's bearish, trade the bearish, right? Don't try and overdo anything. Don't try and overtrade. Really just play it calm. It's a difficult market to read. I'm struggling at the moment. I know that the sectors are offering a lot of sort of structural strength, but it's just, man, every day you sort of come in and you go, okay, today's the day, and it's going to drop, and then it doesn't, and it just goes to another all-time high, and it's like, okay, do it again tomorrow. So it's a hard one. I don't want to put my money on the line and say, right, this is it, guys, everything's falling, because I remember with NASDAQ hitting 15,000, I was like, that's it. Okay, game's up. And where are we now? Let me just have a look and see. The NASDAQ is sitting.
is there some value though in trading a little bit smaller right now, just because?
Oh, yeah. I think This
I
is
mean,
not a market you don't want to be out of the market, right? You want to be trading, you still want to be trading, but trade small. I trade very small. Okay.
I've increased my cash balance over the past month.
Perfect.
So
Perfect.
I'm sort of looking forward to the
Christmas
fall
rally.
Christmas,
Look, the Christmas rally, maybe we're going to get it early. I don't know, right? So let's take timing off, right?
Yeah.
You have to trade what you see in front of you. And the third quarter, up until the end of September, okay, we've got adjustments, we've got people going back to school, we've got holidays ending, we've got all of that stuff coming in. Could we see a very subdued decline in September and possibly then a rally October, November, January, or up to February? Possibly. I think just stick with the charts in front of you. You know me. I mean, my trading style is I under allocate because one of the things that I believe with my clients, if I'm telling them a trade, I have to do the trade. I can't just tell them to do a trade and not do it, right? So I eat my own cooking. And because I've got so many clients that have got different views, I don't know which clients do what trade. So I have to apportion my account on a percentage basis to each trade that's a lot smaller than maybe I would do it if I wasn't doing that, right? So, my trade sizing is small, except for sectoral ETFs and my priority trades, right? So the big trades that I have, Google, Amazon, Facebook, Netflix, the guys that move the market. And I think when you're trading stories or you trade themes, it depends on your conviction to the theme. I don't really have strong conviction on peripheral trades. If I'm trading some ARB stock from wherever because the setup is good, I'll put very little money into it. Get the win, get the W onto my book so that I can continue to develop my database of setups that win, right? That's the important thing is I trade setups, not stocks. So I'm happy to trade peripheral shares, but I'm always keen to just de-risk the portfolio that way. And it's an important thing to remember in option trading that the percentage of capital that you allocate to your options book relative to your long-term investment strategy or your reinvestment strategy will determine how much volatility you're going to experience. And, I often hear beginners, lamenting the fact that the NLV of their account is volatile. And I always say to them, well, then de-risk it. Take money off your options account and increase your cash balance. If you can't tolerate volatility, well, one, you shouldn't be doing options, but two, just change the allocation. So increasing your cash is a really good thing to do when markets become illiquid or it becomes, against the bias that you've been trading. So if you've been trading bullishly, increase your cash, takes away some of the volatility that's going to be endemic to that bullish bias. So cash, raising cash now it's not a bad thing. You want to be prepared for October. So we always try in our group to be a sort of 2 to 3 weeks ahead of the market cycle, right? So we've been building our cash since the beginning of August, end of July. We're now sitting very, very flush in cash. We've got low beta reinvestment stocks that we put our profits into. So like 1 to 3 year treasuries, as well as sort of ETF, allocation ETFs, right?
So do like AOM and SHI?
Yeah, I use AOM. Some guys use AOR, some guys use AOK. It all depends on what your risk mindset really is going to be at the end of the day, right? I'm pretty conservative and I don't like fundamental investing. I'm not a fundamental investor. Don't ask me to read a balance sheet. I'll fall asleep before I get past the comments. But when I trade and I trade with profits, I have to put those profits somewhere, right? And if I put them into more option trades, I'm increasing the inherent volatility of my whole account with the more positions that I build. So if I'm day trading, I take my day trading profits at the end of the day and I put it into treasury bonds. I buy myself a bond ETF and that's got zero volatility. It's just like cash, but it sits outside of my cash balance. So it doesn't distort my performance. It sits outside my cash. It's in equities. So it's in my equity component of my reinvestment, but it's not volatile. So I'm actually reducing the volatility in my account by doing that. And then at the end of each cycle, so then, I have a profit cycle on my day trading. When it hits the goal of that cycle, I sweep the whole account back to zero, take that profit, and I put it into my AOM ETF, or I put it into my long-term investment account.
So if you like for say beginners that are using this strategy, so you're saying either put it into, I mean, one option is obviously to make a separate cash account.
Sweep it out. Yeah,
sweep it out, put it into like a savings account or whatever. And then the second option would be to put it in something that's obviously going to grow and it's not that volatile, or a cash substitute. So like AOM, and you said the SHY is the bond fund that you like.
SHY is a very small bond. It's a 1 to 3 year treasury bond fund. Doesn't fluctuate a lot. Zero volatility, zero beta. It doesn't really grow. It's cash, right? So you could do that. I have some clients that take their profits and just buy Apple stock. Okay. So they've been accumulating Apple shares, whether it's 10 in a week or 20 in a week or 30, it doesn't matter. The quantity that they purchase each week is irrelevant to them.
So they're buying investments with profits from trading.
Yes. And then as those Apple stocks get more valuable, they know based on their written plan that all those Apple shares came from trading profits. So the real book value of those trades, of those shares, is zero because it came from trading profits. So you build up your equity by investing into other things as well, not just trades. So I keep the value of my trading book pretty consistent. I don't add more capital to it. And I think a lot of beginners overcapitalize their trading book too quickly before they've got enough experience to diversify across strategies, right? So some people will go in and say, right, I'm going to just do naked puts and bull put spreads, and I'm going to trade with $750,000 of cash. I'm like, well, why are you doing that, right? So often what happens with that is they're taking an inordinate amount of risk. They start sizing their positions a little differently. They're not recognizing the multiples of strategies that you've got on those two types of trades, right? So you've got 3 different types of put spread strategies you can follow. You've got maybe a multitude of strategies on naked puts that you can follow as well, based on the technical setup. So they don't understand the technical setup. They understand the trade, but not the technical setup. So they over allocate. Then all of a sudden you have a market sell-off. Their account blows up because they've over allocated. They blame the market for that, not themselves. This is the thing that I always find, quite frustrating when you're talking to people who are beginners who've now suffered a loss, is that often the blame of the loss is not taken by the trader. It's apportioned to the market. Oh, the market did something to me. Okay, now they've blown up their account once. They don't learn from their mistake. They go and do it again. They blow their account up again. All right. So what I try and say to clients when they come on to me, is stop trading. I don't want to see you trade for 30 days because I want to understand how you think as a trader, because everyone likes to think that they're a trader. But I can tell you from my experience, not everyone's a trader. Not everyone, because there's a mindset that comes with it. Traders, I feel, are completely agnostic. They do not care if the market goes up or down, and they are fully accepting of the fact that the market doesn't give a rat's behind about the existence of that individual. All right. Novice traders always blame externally when things go wrong. Professional traders always look at what they did, know what they did wrong, and then, strive not to repeat the same mistake again. So it's getting to
seems like it's, I don't want to interject here, but it seems like it seems very akin to trying to, I don't know how to surf, but can you imagine someone surfing and every time they fell down, they blamed the waves or the board? Yes. And never their skill.
That's a great analogy.
Or they get lost at sea and it's not that they can't read a map or use a GPS or set the sailboat right. They're just lost.
There was a case here a couple of months ago. A very famous jiu-jitsu guy out in the West Coast had a student that went to a tournament, and the student lost. I don't know if he got injured or something. I mean, I'm paraphrasing the entire story to make it brief, but effectively the student sued the instructor for not teaching him how to do takedowns. I mean, it got to a point, it was comedic, because you look at it and you go, bro, what are you doing? You actually wanted to sue the teacher for not teaching you something, and you decided to go, you literally You cannot make this shit up. Okay, it's just, excuse the
Well,
French.
so, yeah, some people are just like hardwired. I think, obviously with trading, it's going to be, you can work yourself out of this, but I think some people's personalities are hardwired to externalize every failure.
Oh yeah, trading brings that out in everyone. I'll tell you now that most people are like that. Okay, 90% of the people that try trading or whatever are external blamers, right? It's always someone else's fault. Market, Biden, Powell, whatever you want, Afghanistan, COVID, whatever you want. Oh yeah, Oprah, So the thing that you've got to work out with first is, what strategies do you actually understand, the mechanics behind them, and what's the impact on your account? Because if you're trading strategies that are highly volatile, and the only measure of success in your mind is your NLV going up, well, best you trade strategies that are not going to create huge amounts of volatility, because if you do, you're going to be happy one day and really annoyed the next, because your account's going to move 30 to 40 grand in a week, let's just say. Okay, I'm using a number, but you have to understand the implication of how that trade works. Most people don't want to do that work. Most people don't. They see trading as being a straight line from 0 to 1,000,000. That's 99.9% of beginners' expectation, is that they're going to go in. I remember having a conversation with someone who was annoyed because his win rate was 98%. And I looked at him and I was like, what are you talking about? I was like, you've lost 2 trades out of 100 and yet you're annoyed. He's like, yeah, I wanted to have a completely clean sheet. I'm like, well, that's just stupid. Now you've put an unrealistic expectation on yourself in terms of being happy or sad. I said, your happiness should not be driven by your success rate or your NLV for that matter. Your success as a trader and your confidence as a trader doesn't come from seeing your NLV go up and down. It comes from looking at your rules and saying, how compliant have I been? Have I followed the rules that I said I was going to follow, or did I cheat? That's far more important over the long haul than seeing your NLV going up day by day, because your NLV going up day by day is an unrealistic expectation if you've allocated high amounts of capital to options. It's not going to happen. So it creates this emotional loop for people, and that's what causes people to lose on their accounts. And also, they pick the strategies in the worst possible times, because premiums and yield are the things that they use to select, not the trade setup. So a lot of people don't read the setup and then go, okay, on that setup, I know that this strategy are going to work, as opposed to, oh, I look at the setup and I'm just going to default to my favorite trade, which happens to be a naked put because it's the only thing I know. Let me over risk the thing and see what happens, kind of stuff. So that's the sort of, mindset that a lot of beginners have. And it's important that they get out of that fast, because if they don't get out of it, they will blow up their account. It's not a question of when or if they do it. It's going to be a question of when they're going to do it. So important things, very important things.
So let's look at, what do you think about the sectors? What are we looking at this week?
Oh, I'm a big fan at the moment of, let me share my screen. So what you'll see here are a couple of my indicators that I've got available on TradingView. So if you subscribe up, there's some free material, should we say. One of the things that I really enjoy is, every day, if you just go through a trade and you look at the various sectors, you've got to understand where there's sectors with strength and sectors that have got weakness, right? So one of the sectors that I really like at the moment is XLC, which is the communication sector. If you scroll across, you can see it pulling back to the 8-day EMA, the 8-day EMA, which is this green line here. Let me zoom in a little bit. Okay, and one of the things that I really like as well is using the 1-hour chart together with point of control, showing me where I can actually get into the trade or not, right? So here's a setup that I use a lot on strong trending sectors, right? So the green, the red, and the blue lines are the daily moving averages, right? This is an important trigger point, right? So I've got the 8, I've got the 21, and I've got the 34 EMAs from the daily chart. I've got the volume profile intraday with my point of control, which is this cross line, this red line that's going across. So
Is that an indicator that's available? Like,
yeah, it's free. It's free, right? So I use session volume numbers. And what I'm looking for here are bullish crossovers of the point of control together with the alignment of the moving averages on higher time frames, number one, the TTM squeeze, and this proprietary alert that we have here, which is our wave, right? We call this a B-score wave. Now, effectively, what I'm looking for, if I want to sell a put spread, okay, so here I had a put spread selling signal here, where the stock traded to the lower end of its volatility range, we didn't get a confirmation signal on the second candle, right? So this green candle here invalidated our put spread signal. We had a reversal indicator telling us to sell on this candle here, together with a momentum shift to the downside. And what we had there was a decline in price all the way down to here. Now we have point of control being established here at around 85.48. And you can see the price is sort of hovering on point of control. Now, we could buy into this trade on a confirmation candle to the upside. All right. So if we get another candle here with a higher high and a higher low, that would be a bullish signal for us. If we've got moving average alignment down here, a squeeze firing to the upside, and this line, this sort of gray line that we have here, has a number above 50. So you can see the number is 38.4. So we're not there yet, right? And we're hovering on point of control. We've got these moving averages going green, but because this line is below 50, the likelihood of this squeeze here, this momentum shift firing to the downside, coming this way and dragging the price down towards this daily EMA is high. Okay, when I say high, I don't mean there's a 90% chance. It just means there's a high probability, probabilities are what we trade, that the price could be lower in the next couple of hours than buying now, right? So that's what I'm going to be looking for, is a price on XLC to come down towards this daily 8. If it can come down to the daily 8, we'll be much better off buying an option on our at the daily 8 than we would be buying it up here at point of control.
Right? So you're not overpaying for anything too.
Yeah, I'm just waiting for that pullback on an intraday basis to a daily price target, right? So this is something most people forget, is that when you're trading on an intraday chart, try and make sure that you've got your daily indicators on that chart. So you've got that price. Because if I switch this to the daily chart, there's my daily EMA, 85.02. On my hourly chart, 85.05. There it is around. Okay, so this is where I want it to be. So when I'm looking to enter a trade, particularly in a trend that's green, so, you know, if it's rising, bottom left, top right. So if we go look at the chart, you know, you can see from this, it's pretty much, you know, if I draw a little line from this side of the screen and I scroll it to the top, you can see that XLC is trending in the right direction. It's not as strong as everything else, right? It's not just this vertical line from here up. But you can also go back when you look at these indicators and you can see what happened when the B score went green, right? So this was a switch above 50. We had green moving averages. We had a momentum signal shift. Look what happened to price. If you'd bought there, all right? So here was our sell now signal. Here is our buy now signal. Look what would have happened. You would have been trading it all the way up to here and you would have exited over here. So you would have entered at 84, sold out 85.80, right? So that would have been a pretty good trade to have been in. So, you know, one thing that you've always got to remember is the alignment of indicators. I do not trade on one indicator. I'm always looking for validation from different angles, right? So if I've got a momentum indicator, I want to start looking at volume. I want to start looking at other things that are going to validate the direction into which the stock is going to play. And that's what makes trades high probability setups, is when you've got multiple indicators telling you the same thing, but they're not using the same data to come to that conclusion. They're using different pieces of data and the output's the same. So, you know, on this screen here, we have our put spread selling signal, we have a reversal indicator, we have our point of control and volume profile. We've got moving averages, we've got our TTM squeeze and our wave alert. So this is a pretty basic, you know, most of my clients use the same setup. We know that we buy we start going long on the EMAs on the daily. So the 34, the 21, the 8. If the price drops to the 8, we do a fraction of the overall portion that we're looking to trade. If it goes to 21, we do a little bit more than we did at the 8, but less than we did at the 34. And if we get to the 34, we can see just in history that the 34 has always been a really good buying opportunity if you get there. But when it gets there, it doesn't hang around there for long. So if you don't have an alert system built into your trading platform, you're going to miss these buying opportunities. All right. So it's important to remember that as a context within your trade strategy. Don't just do something blind. When I send an alert to my clients, I make sure that they've just realized that that's what I'm doing. They should still apply their filter and their technique and their trade strategy on top of that. So make sure that the setup is valid for them. The setup might not be valid for them. So XLC, I'm looking at. XLI was another one. Here we have a selling signal. We are above the 8. We've got a reasonable trend in play here. So I'm watching this one. I'm just looking for my B score to get above 50. I'm looking for, if you look at the moving averages, you can see that they've improved from reds to grays to zeros, right? So now I'm looking for greens. I'm looking for this to become a positive trade. So I'm waiting for it. I know I'm at the bottom of a vol range at the moment. So if I wanted to sell a put spread, I could do it here, although I would probably use the 34 EMA as my short, so somewhere around 103. And this is on the 1 hour chart. So I'm looking to go maybe 3 to 4 weeks for expiration using the 1 hour chart. So XLI is worth looking at. Another one worth looking at is SMH, which is the semiconductors. So you can see point of control, prices hovering around point of control. We have an improvement in the moving averages. So we've got our 2 green dots. Ideally, I'd like more. I don't have a squeeze, but I've got momentum to the upside. And my B score is sitting at 70. So because my B score is at 70 and I've got an improvement in my moving averages, I could possibly do one trade here. I would ideally like to do more on a pullback to 269. But the risk you always run by setting your price targets for entry too low is that you miss the continuation of these setups. So if I'm going to trade something from here, it would be 1 or 2 contracts. If I got a pullback, I would average in, and I'd average in at these levels here. So SMH looks really interesting. For someone who's interested in the leveraged version, you could look at USD, which is the Ultra. This is a 2x trade. Here you can see moving averages are not positive. I don't have a squeeze. My B score is above 50, and I'm hovering underneath point of control. Now, I have got a reversal signal here. So I could be trading off this signal, potentially just one contract, just go in, buy something as sort of like a pilot position. When you trade options, don't look to win on every trade. All right. You're not going to do that. What you do is you put a pilot position in. If it pulls back, I average down. If it goes up, I add more. So the key thing on establishing pilot positions is don't overpay. All right. Don't overpay for this trade, because if it goes wrong and you bought an expensive call option that cost you $3,000, it's a bit of a waste of money. So what you would be looking to do for pilot positions, maybe a cheap bull call debit spread using the expected move, 90 days from now, just to put it on your book so that you can watch the trade. This would be a pretty interesting one to look at. Finance is interesting. I like the side here. I like the finance setup. We've got a momentum signal shift. We're hovering at point of control. I've got my green dot here, not ideal. I would like the top one to be green, but that would need all of my moving averages on higher timeframes to be green. My squeeze is not there, so I've got a green dot on the squeeze, which means there's no compression. And my B score is at above 50. So this might be something worth watching over the next day or so to see what happens. We are trading underneath the 8. We're trading around the 21. So this would be an interesting entry, but we do need to see more evidence here in these signals that this is going to be moving up. Now, this is the hourly. Let's look at the daily. You can see it crossing the 21, right? So it's underneath the red line. See how price is below the red. and below the green heading towards the 34. If we can get an entry at the 34, look what happened the last time it was at the 34. We had this massive run up here. So this might be interesting. B score's gone negative, and I've got negative moving averages on the day. So let's see what happens over the next couple of days to see if finance can pull down to the 34. If it can, that might be an interesting entry. XLK on the technology side, hitting the 8, moving averages are positive, momentum to the upside, B score above 50. This looks like a trend that's staying intact. So I would be keen to add more here on a pullback. So if we go to the 1 hour chart, it's on point of control. What I'm looking for is a pullback to maybe 158.37. I would be looking to buy. So I had a reversal signal here, pretty much at the same price, from a week ago, 5 days ago, 4 days ago. So this might be an interesting place to add to any positions in XLK that you have. So the market's got opportunities. I think that you've just got to be very selective. I would probably say 60 to 70% of my total trading volume is in the spider sectors as opposed to the stocks that are within those sectors. So I prefer trading the ETF on the swing trade basis. I find the volatility more in line with what I'm willing to handle. But if you didn't want to trade these individual ETFs, you could easily go in etfdb.com, documents what the top 10 holdings are. Have a look at the top 10 stocks within the strongest sectors and trade those. There's more than enough opportunity. Like at the moment, there's more than enough opportunity. Where the people struggle with is trying to force feed a strategy into the market where the market condition is not right for it. That's a recipe for a disaster. So be careful, trade safe, keep things small. There are opportunities. Go through to rogueinvesting.com, Alpha Hunters, if you want to know more about what we're doing on our trades. I can't remember, Brian, how many winners we've had. I think we've had around 30 over the last month and a half or so.
Oh.
So, come on over and have a look and see what we're doing. And
definitely, people are making some good money there. I like it.
And the most important thing to remember about Alpha Hunters, it's not just about the alerts, it's about learning how to do it for yourself. That's the most important thing. I'm not a fan of dependency in any way. I don't want people to be overly dependent on, an email to tell them what to do. I think that's a very inefficient way of doing things. What's efficient is showing you and giving you the tools so that you can do things on your own. And that makes more sense because then it's a skill that you're learning rather than an addiction.
Yeah, we get a lot of feedback that this is sort of a unique product in the sense that most financial services don't offer an educational component. They just make you reliant on it instead of teaching you how to fish.
Yeah, I went through that as part of my evolution where you develop this dependency, and then if that person gets it wrong and you're not tracking how those people actually do trades, you might be over reliant on someone whose strategy just doesn't fit you. And that's a recipe for a disaster. So the whole thing that I'm trying to encourage beginners particularly is you don't need to blow up your account in order to be successful as a trader. So there shouldn't be these events that cause these problems. Really, if you just plan properly from the beginning, you can avoid all of that. And I'll be honest, I blew up my account. I followed everything that was being told to me by emails or whatever it was, 10, 15 years ago, and it didn't work. It didn't work because I didn't have a plan and I didn't understand what I was doing. I was just copying someone. That's not useful at all. So be careful, guys. At the end of the day, when you've worked hard for your money, the last thing you want to be doing is throwing it away. And sure, you might win for a couple of months, but it takes 1 to 2 trades that are done badly just to give some of that money back. That always leaves a little bit of a thing in the back of the neck. It's horrible.
I agree. Well, Chris, we've just got a few minutes before the bell, so we'll let you go for let you get your trading going, and we'll talk to you.
Always good to see you, man. I'll see you next week. I'll try and be less injured and more fully, more whole next time. Okay.
Just take care of yourself.
All right, buddy. Take care, man. I'll see you soon.
All right. Take care, Chris.
Cheers, mate. Bye.